Hey.
Hey, Brian, how's it going?
Good, good. How are you? Lovely day in the city.
It's beautiful. Yeah,
Yeah.
we got sun out. It's cold but sunny. It's one of those favorite fall days.
Yeah,
Yeah.
and and it was a crazy day in the market too. We were looking at that Russell chart just before we started. It was just
Yeah,
it's like
crazy.
two mountains to
Two
the valley.
mountains. Yeah, there's not a lot of juice left in the Russell tank.
Mm.
So much to talk about. So, a quick agenda of what we're going to talk about today in our episode. We're going to talk about the GDP numbers came today for the third quarter. GDP now had it really high. We'll talk about economy. Bill Ackman covered his short on bonds. We'll talk about that. Bond King. Bill Gross also talked about bonds. I think that's important as well. We'll talk about the Twitter, how their engagement is down, and some Gen Z workers, and of course some trade ideas for next week.
Yeah, for sure.
Really packed. Let's get into it. So let's start with the market. What's going on? What moved the market today, Brian?
Well, as you know, we've had lots of earnings this week, and some good ones, some not so good ones. But it doesn't really seem to matter what people are putting up or what companies are putting up now.
Yeah.
Or Meta had some pretty good numbers,
Yeah.
and they sold it off the day before. I think that was on some news of some investigation or about and lawsuits by, I think it was about 41 states.
Yeah.
So they sold it off, and then the following day or that evening they had their earnings and sold it off some more. So yeah, kind of nothing seems to be going well.
Yeah, absolutely. It's crazy. So I looked at the chart. I lost all my slides, by the way. I don't know what happened. It closed and it didn't save. I looked at the chart that said companies that miss earning even by a little bit, earning per shares, they're dropping this quarter by over 5%, which is quite astonishing. So companies that are even a little bit of miss on their end, market is really punishing them by a lot.
Right. Well, I think the other thing that I think that's going on is, we've talked lots about the Magnificent Seven.
Yeah.
And, how they've been holding up the market. And I think it's sort of like the later stage of a bull market or some kind of a market where you've had a couple of stocks that have really been holding things up. Everything else is sort of down, but once it goes on for so long, and then eventually the strong stocks start to roll over too. And I think that's what we're seeing now is basically the Magnificent Seven that have been holding us up are now starting to
fall.
Get sold off. Like look at your chart here today, your heat map. We had
Apple,
the
down
big
some.
losers. All the ones that have been pulling us up: Alphabet, Microsoft, Apple,
Google.
Yeah.
And these are big market caps, so
Yeah.
you can see how big they are. So when they go down, when Apple goes down by 2.5%, the whole market, that's like 30 basis point for the whole market.
Yeah.
Yeah. I want to take a look at Meta and see what happens to it afterwards, because I know we talked about a potential trade on Meta as well after earnings. Yeah, it did try to go up, but then sold off throughout the day and didn't do much.
Yeah. So you picked out a good level there, I think around 370, 375. Probably some pretty significant support there. And, I am expecting, we're probably going to get maybe a bit of a bounce here because we've really been selling off pretty hard, and nothing goes straight up and nothing goes straight down. So
that's true.
It'll be interesting to see. I don't know what Amazon's doing after hours. Initially, it was up.
Yeah, but apparently it gave everything back. So,
is that right?
Yeah.
When I. They did. Yeah, because when I was on just after on for the earnings after the close with Peter and Jared, and we were watching it. You could see there right after earning or after hours, it spiked up.
Yeah.
Oh, so it's giving it all back. Yeah. So it's behaving like pretty much every other big cap name that we've seen report this week, right?
Yeah.
So it's just. I don't know. Maybe some comments about weak guidance.
I'm not sure. Yeah, probably there has to be a reason, but it seems like there's not a lot of juice left in the tank for a lot of these names at the moment. So if I wanted to bring up the chart of IWM, because IWM I think is the most interesting one. So it's now at 164. This is, by the way, is a level that has been tested multiple times. So you can see October lows, June and July lows, and I think even if you go further back, it's right at that 2019 level. So almost 5 years of nothing.
Right.
Which is unbelievable. What's your thoughts on small caps? Do you think it's a buy now here for a potential triple bottom?
Well, certainly, we've been range bound since, for the better part of the year. You can kind of see that box that's been formed. And, we're right at the bottom of that box. So I think we're at a pretty critical level for the IWM right now. So is it going to break lower? I mean, it might find some support here and bounce a bit.
Yeah.
But I can't say that I know for sure which way it's going to go, but I'd be watching this level now because, we've got a lot more downside if we break and head lower.
So there's a comment saying they said the stocks usually crash from oversold levels. So it's one of those things that if IWM is going to collapse, it's probably going to collapse from these levels that is pretty oversold at the moment. Right. Small caps definitely not in a new bull market, right?
No.
No,
I mean, you can tell from that chart. It's like I said, we've been range bound since since roughly April of 2022. We really haven't done much. So.
Haven't done much. And I saw this really interesting chart on Bloomberg that I thought I'll share. Is the percentage of small caps that their forward earning is negative, almost 35% of the stocks for next year. They're expecting a negative earning.
Wow.
And only less than 15% are expecting 7 times earnings. So very weak, very, very weak.
Right. Which doesn't give you a lot of confidence that this 164 level is going to hold on the IWM. I mean, it's not looking very good.
No. Are you? So what do you think? Are you going to sell some puts here or?
Well, no, I don't think I'd sell puts. I'd be inclined to sell puts up where keeps bouncing or keeps banging its head there.
Yeah.
But that's pretty far out of the money right now. So, I mean, you could sell some puts or sell some calls and then buy some downside puts if you wanted to
play it on a downside.
Play it for a downside bet for no money, but with some risk. Obviously, if we do bounce, then the calls you sold may end up in the money.
Yeah, and you don't want that.
Yeah, no, not really. But 175 might be a good level to sell calls at, and maybe buy some 160 puts. Yeah, could be right in the middle there.
Yeah, very well said. So 175 right around here, selling some calls and then buying some puts right here. So kind of betting that the move will continue. So your calls will slowly decay in value. You'll be able to buy them back or let them expire worthless. Yeah.
And hopefully your puts will
make you some money.
Will go in the money.
Yeah.
And if it goes nowhere, then you've sold calls, you bought puts with the money, so you're not going to, end of the day, you won't lose money.
Exactly.
As long as it doesn't reverse on you.
No, fair. That's very smart. So the good of the week this week is Bill Ackman. He covered his bond shorts.
Yeah.
So he tweeted about it as well. He said we covered our bond shorts right around 5%. A lot of people were saying that the drop in the yields, and I have the yields chart here as well, the drop in the yield, and this is, I believe this was the Ackman, when Ackman tweeted. And a lot of people are attributing the sell-off to him, which I think is not really the case because it's trillions of dollars. I think there was a lot of buyers stepping in because 10 years for 5 years, 5% guaranteed, that's a good deal.
That is a good deal.
That's a really good deal.
I mean, when you think that, most people think 6 or 7% is sort of what
expected return.
The expected return for a year. Getting 5 risk-free is pretty attractive for a lot of people. So there's a lot of people that are taking out that kind of money, putting their money into that instrument. So
Yeah. I mean, I think if you ask me, I think even 20 years right now at 5.25 guaranteed. These are pretty good deals that you're getting. Yeah.
And then you look at the performance of the market lately. People are watching stocks go down, and a 5% yield looks pretty good right now.
Exactly. So. Yeah. I mean, especially I tweeted about this. If you're a fund manager, a small cap fund manager, it's been hell. Like, it has not been good at all. Like, if your mandate was to invest in small caps, it definitely has been hell. Bill Gross, so one of the founders of PIMCO, like a well-known bond king. He at some point he was managing, I think, trillions in asset. Tweeted this last week. He said it might be a time to buy some regional banks. Like, they're starting to get really attractive. He says regional bank range and recent rise in auto delinquencies to long-term historical highs indicate U.S. economy is slowing significantly. Recession in fourth quarter. Best investments are equity arbitrage. I'm seriously considering regional banks again. And then he says maybe next week I will tweet about it on bonds. Invest in the curves. Combination of 2s and 10s or 2s and 5s should go positive before year end. I'm buying SOFR futures. Higher for longer is yesterday's mantra. So he's basically saying rates are going to come down, and he's the bond king, right? He's saying 2 and 5 will uninvert, so meaning the 2 will fall more than the 5.
Yes.
So what are your thoughts?
Well, I think the general consensus from what I'm hearing a lot of people talking about is that not so much higher for longer, or not higher for longer, but just high for longer. It's just the rates aren't going to come down because obviously inflation's not coming down. The economy is still strong. We were talking, you had GDP up in your thing there. The GDP was really strong. I mean, the economy just keeps humming along. And I didn't see what jobless claims were, but again, I think they were pretty solid.
210.
Yeah. So I mean,
higher.
again, just there's a job. There's
people are employed.
1.5 jobs for every worker that's looking. It's so I can't see rates coming down, but I think it seems like the odds are on no more rate hikes for the rest of the year. They're just going to keep them where they are, and there is some anecdotal evidence, like you said, auto delinquencies up, and credit card and
balances
are coming up, and some bad loans are. There's more. I think the banks are adding more money into their sort of bad loan portfolios. So there's lots of evidence to show that the interest rates are going to have an impact. It's going to take a while. But I mean, high for longer. I think we're looking at this 5% level for a while. But I don't think we're going to be going up 6, 7, 8%.
No, I don't think so.
No,
I think that would be a disaster. I personally think there will be, if we go to 6-7%, a SPY would be at like 380, 370. I think that I think we're kind of just stuck here. Odds are on. I looked at the odds for a rate hike. Obviously, almost nothing, literally zero in November, and about 75% people believe that no rate hike in December either. So I think we're looking at a pretty just steady as she goes to the rest of the year. Yeah.
And then we'll see what happens in 2024.
Yeah. I think the CEO of BlackRock was saying he sees a recession in 2025, so not even in 2024. But it's hard to see because once the economy rolls over, it also rolls over very fast.
Yeah, it rolls over very fast. You start getting layoffs, and then then there's more layoffs, and then people are out of job, they're not spending, then there's more layoffs. So it kind of snowballs, right?
Another interesting thing that I saw, and I have it on the 10-year on the TNX, is this is October 7. This is when the Israel-Palestine war happened. The yields came down, and the expectation was the yields are going to come down now. But since then, they're actually trading higher. So we're at 4.84. I think it's very likely we test the 5s again, personally. and maybe even go above it.
Well, we almost, I think, I'm not sure if we actually got above 5
We got
today.
above 5, yeah.
Today?
Not today,
Not
no.
today.
Yeah,
I
at
think,
some point, yeah. I think we went...
I think it came really close to 5.
Yeah.
And then we really, we came off pretty nicely
fast,
today,
yeah.
which I'm happy about.
Yeah.
Because
yeah.
I'm long bonds,
Yeah.
which I want to see the yields at least stay the way they are, or even better if they drop. I'd be very happy. But anyway, it's one of my positions that I think it's still looking okay. It's shorter term than yours, but my puts expire in January next year.
Next year. Oh,
Yeah.
I think you're gonna make money. It will be a great Christmas gift for you. Yeah.
Yeah.
So we talked about the good, which is Ackman finally covering his short. Let's talk about the bad. And the bad is, this is the daily active users on mobile apps globally, changed from October 22. So you can see X is down in the last year 20%. Snapchat up about 10%. Instagram up slightly. YouTube up slightly. TikTok, Facebook. And then you got X. So I mean, I love how we love to like brand it as, oh, there's the level of innovation in X in this year has been amazing, but reality is different. Like, users are not using it anymore. Engagements are down. Everything's down.
Yeah, I'm not sure why. I mean, I know obviously there's, as this chart points out, I mean, there's a lot of options, a lot of choices that consumers can make in terms of, where they express their views.
Yeah.
And you can see there, X is just like fallen off a cliff, while the other ones are picking up their share.
Yeah.
And I'm not really sure why, if it's the quality of the platform, or people don't like Musk, or
maybe a little bit of both.
Yeah, I mean, certainly, I mean, he gutted the company and is facing a lot of problems now with all the misinformation, because nobody's sort of monitoring some of the stuff that's coming out. The misinformation that's being put out on Twitter. I think as much as I don't like TikTok because of the potential CCP involvement. Chinese Communist Party. I mean, they're extremely regulated, but of course they're regulated. They're regulated, but then of course they're also moderated by the Communist Party. I think they kind of influence what we see versus what the Chinese people see.
For sure.
Yeah. But much more regulated, and I think they're a lot more active in terms of taking inaccurate content down. So. But it's interesting. YouTube's gone up a lot.
YouTube's gone up a lot.
And Snapchat, wow, eh?
Snapchat, yeah, I know. I mean, their stock.
Yeah.
They had earnings, by the way.
Oh, I know they did. Yeah. And they were kind of all over the map.
It was another terrible earnings. A really interesting stat I saw for the earning is they collected $40 million in interest income on their cash balance. They had a stock-based compensation of over $350 million, and company lost a lot of money.
Wow.
So the executives and the employees got paid in total $350 million in that quarter, while the companies are struggling. It's really a hack, like executives giving themselves these options, and there is no governance because of passive investing. There is not a lot of governance. Nobody will tell, hey, you can't pay yourself that much. The boards are mostly passive. There's like BlackRock and Vanguard. And it's
I think that's and that's the problem with some of these boards. It's the people aren't willing to challenge the management and say, we can't do that.
No.
Because the boards are probably getting paid too at at levels that they shouldn't be probably being paid. So I see that a lot. You see that a lot, and even junior companies. You see companies that aren't making any money, and the CEO is making $250,000 plus all his options. It's just
it's crazy.
Yeah.
Yeah, it's definitely a cheat code. Now it's time for the ugly of the week, and this is probably one of the funniest. Jason Calisthenic? Do you know this guy?
No, I don't.
So he was a reporter He had a website in 2000, and during the dot-com bubble, he sold his company in the 2000, and he became wealthy. There is a lot of kind of drama that he got very lucky, but now he's one of the close friends to Elon Musk, so he's a thought leader now, and he's part of the All In podcast. So he started dunking on this girl. This girl's Gen Z, and she's talking about how she hates her first 9 to 5. Let's watch this together, a few seconds of this, and then and then discuss.
I know I'm probably just being so dramatic and annoying, but this is my first job, like my first 9 to 5 job after college, and I'm in person, and I'm commuting in the city, and it takes me fucking forever to get there. There's no way I'm gonna be able to afford living in the city right now, so that's off the table. Like, fucking duh! If I was able to walk to work, and it'd be fine, but I'm not. So it literally takes me, like, I leave here, like, I get on the train at 7:30, and I don't get home till, like, 6:15 earliest, and then, like, I don't have time to do anything. I want to shower, eat my dinner, and go to sleep. I don't have time or energy to cook my dinner either. Like, I don't have energy to work out. Like, that's out the window. Like, I'm so upset. Oh my god. Nothing to do with my job.
So he said, "Oh, princess, I'm sorry you had to commute and work. You have a job and everything. It's like so extra." So he was trying to make fun of her, and I found he got a lot of backlash on the comments.
Mm-hmm.
Especially because he's one of those dramatic people that kind of started the bank runs there in the Silicon Valley debacle. But there were some really thoughtful comments, like this one. It says, "Usually Jason Calisthenic tries so hard to be in touch with the masses. His private jet from San Francisco to Vegas must have been delayed." There was another really valuable comment as well. What she's complaining about is not having to work, but it's about infrastructure that there's lots of traffic, commuting is becoming really hard, and we didn't really build our cities, and on affordability that has been happening. So it might be very easy to make fun of her, but she is talking about something pretty valid, right? In a lot of US cities there's not a good transit. Transit takes a long time. Commuting is hard, traffic is hard because there's not a proper infrastructure. So they spend 30-40% of their time in commuting. That's not cool. What do you think?
Well, I'm of two minds. I don't know obviously her whole story or how much how much of that is actually true or she's exaggerating, but it is a drag if you have to spend an hour. It sounds like she has to spend an hour and a half commuting every day, which is a lot. It's a lot. I think if the situation, I mean, I all my jobs throughout my career, I commuted to work, and it took me better part of half an hour. So and when you're doing a half hour there, half hour back, it eats up an hour of your day, right? And that's an hour that's you could be doing other stuff. So I kind of feel for her in a way that she has to travel that far. Having said that, I mean, I've had some firsthand experience with some millennials and Gen Z people, and there is an element of some of them, and I'm just going to say some that just feel like they're entitled, and I don't know, maybe it comes from the way they were brought up by their parents, and they've just been, so, but it is a drag. I sympathize her within that respect. I mean, I know when I used to live in Ontario, and I knew people, there were some people that would commute 3 hours, 2 and 3 hours to work, and I just think, how can you do that? Day after day,
It becomes challenging.
Yeah.
Because especially once you build a family, these are time taken away from your kids, right? Yeah. And I mean, I was in Toronto, and I think Toronto is starting to have an issue like this because it's getting so expensive to live downtown Toronto.
Yeah.
And commuting, traffic is insane there. Commuting is becoming challenging, and of course it's very cold there in the winter, so imagine getting on a train when it's negative 40 degrees, but it's becoming a reality. So
and and obviously part of it is the issue with affordable housing too, and I think there's been a lot of things that I think governments haven't addressed, and that let this thing sort of get out of control, so that there's some there's some blame that's got to be put on government. But the unfortunate thing about government is that they typically don't think long term; they think short term. because they're thinking about the next election cycle.
Yeah.
And so, I mean, if you had an argument for communism or a centralized government, I mean, it would be that they actually do think longer term, but not necessarily for the good of the general people. But they do think longer term. So. And anyway,
that's one plus of
communism. Yeah, what was it? What's the least worst form of government is democracy, or least bad,
the least evil.
Yeah, something like that saying.
So going into next week, anything specific you're looking at?
I'm going to take a look at some of these stocks that have just reported. Mm-hmm. I've kind of been I've taken a bit of a step back because I knew this was going to be a volatile week, and I didn't want to take any big bets either way. I did sell some 350 Microsoft calls, and I actually covered them today because they were trading at 7 cents, so it spiked up on the earnings and then just started to sell off. So that's where I think it peaked around 340. So. So I've covered most of those anyway, but I'm sort of taking it easy this week because of all the volatility. So next week I'll be looking at some of these companies that reported, and we'll see how things end Friday. It'll be an interesting day to see if we just sell off into the weekend, which we did last weekend.
Yeah. Let me see how we're doing for the month of October, because I thought October was better. So if I go 1 month. All the sectors are down. Dow's down 2.5%, Q's down 3%, SPY down 3%, IWM down almost 6% in the last 3 months. IWM down 16%, SPY down 10%, Nasdaq down 9%, Dow down 8%. So.
What sectors are we looking at? Like, what's it look like this week for sectors? Today, real estate and utilities, we're looking pretty good.
We're looking really good, and which is kind of ironic because you think with GDP this is strong, rate-sensitive sectors should sell off, but they didn't. For the week, utilities up.
It's the only thing. Communication services, I think that one's heavily weighted with Meta. And so that's probably accounting for a great deal of that. Energy's been off quite a bit, which is surprising given the tension in the Middle East. Technology, obviously, a lot of things have been hit this week. Consumer staples seems to be kind of hanging on there, but discretionaries have I think they've kind of broken down.
Nowhere to hide. Definitely nowhere to hide. Feel free to give us a subscribe. About 80% of folks that watch our channel are not subscribed, so if you like our content, give us a like, give us a subscribe,
give us a thumbs up.
We'll try to do these every week. On Thursday we record them. We'll try to release the content on Friday for you. We put a lot of research into the material, so your feedback is appreciated.
We appreciate that for sure.
TLT had a good day, 1.5% off.
I'm liking that. That's one of my other position. I'm short 85 puts.
That's beautiful.
But they expire just January this coming year, so right now I'm in them for about 350. So if we ended today, I'd be up $3 or so.
That's amazing. It's $350 per contract. It's pretty.
So I'd be happy with that. But if we stay, which is what we've been talking about, if we stay where we are, that hopefully
that's free money.
$85 we'll stick in that. Bitcoin's been on a
doubled.
Roar. I know,
doubled
crazy.
This year.
It was hanging around 26,000 for quite a while, and then it just broke out. So that's another interesting one.
For sure.
Down today. Anyway, thanks for watching, and like already said, like, subscribe, and we'll see you next week.
All right. We'll see you next week, and trade safe. Cheers.